All right, folks, I am your host, Zach Rector here, and I have the pleasure this morning of welcoming Lynette Zang onto our show here today. I'm just going to read off Lynette's quick bio. This is pretty impressive, folks. She's been involved in the markets at some level since 1964 as a student banker, stockbroker, and precious metals and currency analysis. And she's been studying currency life cycle since 1987. So to say that she's been in the game is an understatement, and we're an absolute, just so excited to have you on the show here, Lynette. Thank you for joining us.
Oh, Zach, thank you so much for having me. It's really my pleasure to be here. And it was great meeting you in Vancouver.
Yes, you did such a great job. The silver forecast was a good one, and we'll get into that more later. I wanted to start, though, we're going to talk macro first, then we'll hone in on the U.S. economy, and then we'll start talking about the commodities and the markets and where we see some opportunity. Now, to get started, Lynette, I just want to say I love your mantra, right? All about community and sound money. And that's what I've been about as well. Before I even started investing back when I was in high school, a little over 10 years ago, is when I learned about the Federal Reserve through Ron Paul, actually. And
Yes.
that's when I learned about sound money. And that's when the whole process and journey started for me back then. Now, fast forward, the first investments that I ever did was actually into my own business. But then later into 2018, I started to get into cryptocurrency. So my focus has been on crypto when I first got started, but now we've really broadened out to all of the financial markets. And I'm excited because we've also been on my channel and my community, ones that aren't scared to talk about growing a garden too. And so I love that fact because it's, I come from crypto where it's not as attractive to talk about gardening and everybody wants to find the next 100x coin, right? And I love that you have been about that. Your fundamentals are so solid and your knowledge on the market's extensive, but your willingness to bring it back to the basics, I love that about you so much.
Thank you. I'm very honored.
Now, let's get into it. So we got community, we got sound money, and we're starting to see that the world is starting to build new communities, new alliances, and they're moving to different forms of sound money. Now, I'm so excited to get into this because what we're seeing here, for many in the United States, they have no idea what's going on. They're completely tuned out. But from your perspective, what we see here with the U.S. empire, we'll call it, is this the fall of the U.S. empire?
Well, I think it's the fall of the current fiat money system on a global basis. Now, if what you're really asking me is this the end of the US dollar's position as the world reserve currency, that actually began in 2000. So, yes, I think that there is a shift in power from the US east. Absolutely. I mean, no currency maintains their position as the world reserve currency because over time they just abuse it, and we've abused it, and the world has noticed.
Yeah. Yeah, and we're seeing even our allies are shifting away from the US dollar. France, Saudi Arabia, these were our strongest allies, and not only are they leaving us on the battlefield in some instances, France saying, yeah, that you guys are on your own in that battlefield, but they're also leaving the trade deals that involve the US dollar as well. Are we going to see this accelerate?
I think we will see it accelerate. And especially when you talk about Saudi Arabia is frankly more important than is probably our key ally because it was Saudi Arabia that enabled the US to maintain its position as the world reserve currency since the 70s as we transitioned from at least a quasi gold backed currency to a pure debt based currency. So for them to now be part of the BRICS nation is really, really telling, I think, very telling.
Yeah, and I forget the exact data point that I heard up in Vancouver at the Vancouver Resource Investment Conference, but the amount of oil that they're now selling to China and how China is now becoming their biggest customer and the trajectory, what their projections over the next couple decades, they just don't, there's no concern. They have plenty of clients around the world that are willing to take their product. And now what I want to get into later, we'll talk more, is the ability for these countries. I saw that Sri Lanka just paid Iran in tea. This is direct barter trade. You talk about community, trading on the local level. This is what they're doing on the global level now, trading tea for oil.
Yep. Yeah, I mean, we're going to see that more and more currencies lose the confidence because really there's layers of confidence. And I've been watching since 2008. I've been watching those layers be stripped away. And so, yeah, country to country, central bank to central bank, bank to bank. There's only really one layer of confidence left in this Ponzi scheme. And it is a giant global Ponzi scheme. And that's public to, this stuff, right? So once that's gone, I mean, tell me, what's the difference, Zach, between this bill and this bill?
Right. Yeah, there's nothing. Yeah.
Right.
Yeah.
It's just public confidence is what does that.
Yeah. Now,
this sound money has use on a global basis. And, having studied currency life cycles for more of my life, because I'm 69 now. So, I've been studying them since 87. And you see these repeatable patterns. And you see that you always end up back at sound money when all that confidence is lost. But I don't think it was a coincidence. I read the 1996 NSA, which is a U.S. government agency's white paper on how to create a mint, describing how to create cryptocurrencies. And I just never thought it was a coincidence that Bitcoin came out in January of 2009, and then quantitative easing, all of this money printing, monetizing the debt came out in March of 2009. And the more eyes that you have on the cryptocurrency market, the more adoption you get and the easier it is to make a transition into central bank digital currencies.
Yeah. Yeah.
I believe that what we're witnessing is that setup.
Yeah, absolutely. I got to tell you, I got to get my game up, Lynette. I always got my little silver as well, too. But I need to get the money gun because that's pretty awesome. That's great.
Yeah, we could play central bank together.
That'd be fun. Now, when we look at this, South Africa is reporting that there's over 24 countries that are waiting to join BRICS. But for me, what I keep on reminding my audience about, even if they don't formally join BRICS, doesn't mean they're not dropping our dollar. And we have two roles of a reserve currency, one for settlement transaction and one is a store of value. So we're seeing around the world, they're trying to get away from the US dollar if possible. And then they're also dropping our bonds at the fastest pace since the great financial crisis. So what's your thought on BRICS plus dozens other countries? How big is this alliance that's moving away from the US dollar?
Well, I think it's actually more of a global basis. And I would really say, like, a lot of people will think that the Chinese yuan will become the next world reserve currency. But history has shown us that whoever is the world reserve currency has to sustain the rest of the world, and it's not a sustainable system. So I personally think that what makes a whole lot more sense, particularly in this digital world, is the IMF's, the International Monetary Fund's SDR, which stands for Special Drawing Rights. It's just the name, just like anybody else. Right. But that's the only currency that is not created directly from debt. Rather, it's a basket of currencies, and they can expand that basket to include every single currency in the world, which there are a lot of those coins that they're working on. So you'll have like a universal coin, digital coin, a universal CBDC, if you will, that can easily translate into the local currencies. And so while we are watching this shift, let's talk about China for a second, because all of the ammo that they're throwing at these markets, whether it's the real estate market or their stock market, it's not working, right? So is China really a whole lot better off than the US? Exactly. So the entity that has what they say the cleanest balance sheet is the International Monetary Fund. The SDR has been around since 1969. It was created to take over as the world reserve currency back when we were shifting from that quasi-gold-backed currency into a pure debt-based currency. But to your point earlier on the BRICS, with Saudi Arabia was really the one that prevented that from coming into play. And so everything that they created there kind of went to sleep, right? And it was just, even though everybody, and I mean everybody, airlines, post offices, all central banks, or almost all central banks globally have SDRs and have since the 70s. However, what we're also seeing in 2008, which I put my technical neck on the line, that's when I became an urban farmer and all of that the system died in 2008 and was just put on life support with money printing until they could get the next system that they wanted to transition us into. But what they also did, and it was China that, because I'd say, well, it doesn't really matter what it's called, but China was like, what about the SDR? What about the SDR? And that was 2009. And Christine Lagarde, who at that time was, part of the French central bank, came out and did an interview on Bloomberg. And in this 20 minutes, she probably used the term reset like 27 times. And I went, oh my God, hiding in plain sight. We're entering a period of reset. So the goal and what the G7 is talking about now with all this soft landing garbage, blah, 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 blah. No. That's not the way these transitions work, because they have to basically destroy the old system. So they have to pay off this unpayable, who knows how large this debt bubble really is. They have to reset that whole thing through hyperinflation. And I am not crystal clear yet on what mechanism they're going to use to justify creating the CBDCs. It could be debt. I've heard it. They've discussed having it created by debt. So then it's even more critical to get rid of the debt mountain so they can start fresh. But they've also discussed doing it via purchases. Creating money. Okay, I'm going to go buy a boat for my pleasure. So let's just create all the money so that I can pay for this boat. How much value do you think that money will have?
Yeah. Well, Lynette, we're watching as central banks are buying more gold than they have in 50 plus years. Yep. So this is a data point that's undeniable. And one has to maybe connect a couple dots, right? Because I just continue to ask, what is the alternative? How can they back this new system and give it any sort of trust? I watched your video last night on why Zimbabwe's program to go to gold back isn't working. Can you elaborate on that a little bit? Because I think for myself, I'm a young guy. I'm only 29 years old. And for me, I think maybe sometimes I give these guys a little bit more credit that they're actually going to, back a currency by gold and actually stick to sound money principles. But you described in the Zimbabwe example how that's not what they're doing.
Right, because if you can't convert it, okay, back in the day when they first created this system, you could walk into any bank with this, and if you were unhappy with what the government was doing, you could walk out with this. And what that did is create restrictions around the abuses that the government could do. Well, that was a problem for governments that want to tax and spend and spend and spend and spend and spend. And so in 33, they disallowed us from doing that, but governments could still do that, right? Now, the US as the world reserve currency was really a huge advantage. So to fund the wars, the Korean War, the Vietnamese War, et cetera, they just debased the currency well below that $35 ounce that we had committed to. So by the time 1971 came, other governments, there was a run on the dollar where other governments were sending in dollars and pulling the gold out of the US system. And we ended up having less gold in our system than we did before. So creating even more restrictions and making it much harder to hide the truth. And you have to understand that these central bankers, their job is not to give you the truth and protect you. Their job is to lie to you, keep you in the system, and protect the banks. They are Federal Reserve Bank. They are private. These central banks are private. Yeah. So when you're looking at what's happening since then, what do banks know? They know debt, and they know interest rates. And you made a statement a little bit earlier about going to the dollar as a store of value. Are you kidding? No, the dollar is not a store of value.
Yeah.
Back in 1971, a family of four could live quite comfortably on the average wage, which was $9,500 a year. If you made $9,500 a year now, even as a single person, where are you living?
Yeah.
Under a bridge.
Yeah. Yep. And we just had a record amount of U.S. homelessness. And I'll tell you what, I just visited Portland last weekend, and it's not pretty out there in the real streets of America. Absolutely, Lynette. Now, to your point, so what we have right now, Ted Cruz wants to ban the ability for the Federal Reserve to issue a CBDC. And we're seeing resistance in the United States, as I expected, because there's still a lot of people in America that don't want to go to CBDC and don't trust our Federal Reserve. Now, there's still way too many people that don't even know what the heck the Federal Reserve is, as you mentioned, right? A private group of central bankers that's controlled our monetary policy for over the last 100 years and has created all of these bubbles and all these problems and funded all of the wars. Now, guess how well my little TikTok video did when I posted about, this is a great step in the right direction for Ted Cruz to maybe ban the central bank from issuing a CBDC. But why do we even have a central bank in the first part? Guess how well that video did on TikTok. They didn't let that one get out. But your thoughts on the resistance here in the United States of America against the CBDC?
Well, I can tell you, the fact that you're interviewing me gives me a lot of hope, because you are 29 years old and it is the youth of America. I have a new protege and she's right around your age. And I'm trying to transfer my lifetime of experience from here and put it in her head. So you actually give me a lot of hope, because you are that generation that has grown up in the digital world. I'm of the generation, I'm tail end baby boomer, where privacy was key. Sound money was definitely more key. I mean, in 71, when we made that transition and we saw inflation go, scream up there. I remember having a 5-year CD at a 15% interest rate, right? So really, the fact that you are questioning it and more younger people are questioning it gives me hope that if we come together in community, local, so that we can provide for ourselves food, water, energy, security, barterability, which is what silver is for me, wealth preservation, which is what gold is for me, community, which is arguably these days the most important factor, and shelter. Because these are all the things that we need to sustain a reasonable standard of living and be as self-sufficient and independent as possible inside of community. Yeah. Because in 2008, I was actually getting ready to retire. I was in a little 2-bedroom condo that I could just lock the door and off I go. And I had all these great plans of what I wanted to do. And then 2008 hit, and I went, the system just died. Well, having studied currencies for most of my career, I did not think I would see it in my lifetime. But instead, what I did, and I have children and I have families, so I wasn't at that time prepared to go out and leave them. So I bought a little 1/2-acre property in dead central Phoenix. I am not a gardener by nature. I am a farmer now, because food becomes the single biggest issue for people as we're making this transition. Mm-hmm. You can live without gold. Can you live without food? No, you can't. And you can't live without water. And everything has been turned into a financial product for Wall Street to make their profits. And we think, it's supply and demand. Gee, why is that wheat so high? Why is that loaf of bread so high? Because of traders. What about energy? What about water? It is Wall Street that's controlling the pricing on this. And what's even worse is in 2013, Wall Street took over control of the 10-year Treasury bond, which is the foundation of the global financial system. And if you look on TYVIX, which they don't even publish anymore, they stopped publishing that in 2016 because it looked so bad. But what you see is the foundation is going like this. So if you're in a house and you feel the foundation under your feet going like this, what do? You stay in that house or do you get out? Yeah. But what we're asking people to do is have a paradigm shift. Yeah. And that means that they have to accept the fact that since the day they were born, no matter when that was, if you were born after 33 anyway, or 13 really, since then, you have been living a lie, and they have been using their incredible deep pockets and tools for perception management, managing how you perceive things so that you move forward in a manner that supports their goals, but is definitely not in your best interest. Yeah. Not. So my work is really all about translating financial noise into understandable language. And sometimes I do it really well, and I'm still working on it. I mean, sometimes I don't do it as well as I'd like to. It's a work in progress always. But I so believe in educated choices where the individual puts their best interest first.
Yeah, and let's talk about that divide between Wall Street and Main Street, because this is the biggest issue that I see right now. While markets keep going up and everybody sees green candles and everybody's, gambling their allowance money on Robinhood, and now they're an investor. Everybody's throwing money at crypto. This morning, we just saw that Bitcoin went above 61,000. Everybody's cheerleading. But when we look at the real economic data, I always say the devil's in the details. And you're starting to see that come around and show itself. And we actually got a couple data points here. I wanted to read this off. U.S. consumer confidence falls for the first time in 4 months as anxiety about politics rises. But they also say Americans are worrying about the labor market in the U.S. presidential election. I would argue that, yeah, there's some concerns about the election, sure. But that point about the jobs, because what we're seeing is that these companies are doing massive layoffs and the shareholders are eating it up. The stock pumps when they announce 20,000 people are laid off. So can we talk a little bit about this divide between Main Street and Wall Street?
Yes, this would be a historic norm. So even in 1927, that's when the industrialists started getting out of the markets, right? Or 27. The Fed was a perpetual charter in 28, and then they took the credit basket away. And the reason why I go back to then is because this is all done on debt and margin and debt and margin. So the problem really is, of course, in a debt-based system, this is a big club, right? And you and I are not in it, but you have those that are targeted to succeed, like Wall Street and the banks. And if you look at what's happening in those companies, you will likely, and anybody can do it. Go on NASDAQ, right? Put any stock symbol that you want, anyone that you're curious about in the search bar, and go ahead and look at what the insiders are doing for themselves, right? So a rising stock market will hide the truth of a declining value, because when this goes to zero, like we've seen in Zimbabwe, 1 trillion times zero is still zero. But if you open up your 401k statement and it doesn't look bad, or it looks like it went up, you're going woohoo, when really the dollar is officially 3 cents worth of value in terms of purchasing power. So a rising stock market is like a rising tide. It hides all the garbage until the tide goes out. And I think that what's going to make the tide go out, number one, is the 10-year Treasury and the lack of liquidity in that market. That's such a big deal. And Main Street has no clue about that. But it's also, when this tide goes out, what you're going to see is all of those big derivative bets. And you may have heard the term derivatives.
Yep.
A derivative is just a big unsubstantiated bet against interest rates, against credit, against the sky being blue, against the weather, against all of that. Mm-hmm. You cannot convert it into the underlying asset. Its value is very subjective based on the two parties in this contract and then the price movement of that underlying asset. So if you bought like a stock derivative and your stock went up, well, then your derivative in terms of market value is going to go up as well. So it's all about masking it. But everybody, I mean, the Bank for International Settlements, the International Monetary Fund, the World Bank, the FDIC, the Federal Reserve, or any central bank that you ask, all admit that in terms of this big derivative market, nobody knows the true value at risk.
Yeah.
What we do know is that the derivatives, since they handed it over in 2013 to the traders, to Wall Street, that the interest rate derivative market is in the FDIC insured banks is now 189% of global GDP. And we don't really even know the value at risk. This is the little teeny tip of the iceberg. That's not what you have to worry about. It's all this stuff that's being opaque and hidden from us. When it becomes too expensive to maintain the ruse, they won't. And all they're really doing is transferring that risk from the few, from that 1%, from the banks, from Wall Street, to the many, to the public, so that they are the ones that pay the steepest price. And those in the know, just like they did when we were transitioning into a new system the last time, right? Those that are in the know are getting out as the market's rising because, hey, they're doing buy. And there's so many legalized manipulations. It's disgusting.
Yeah. Yeah. Well, and I'm glad that you mentioned that. I'd pulled up this one because I knew you'd get a kick out of this. The vice chair for supervision, that's Michael Barr at the Federal Reserve, and he was put in charge of monitoring the banking crisis last year, says that bank must do more on counterparty risk. And the irony of this whole thing, right, is that this is what we've been saying, right, that this banking crisis isn't over either. And so, you know, in your opinion, are we going to see more banks collapse? Is this banking crisis over? Where are we at in that regard?
Oh, my God. Okay, real simple. This happens to be one of my sterling silver chopsticks, which is monetary at its base, right? So this is the market value of debt. So it can be bonds, it can be mortgages, it can be auto loans, it can be student loans, it can be credit card loans, all of that. This is the market value of debt, and these are interest rates. And so since 1981, when interest rates peaked, right, what did we have? We had 40 years or so, 50 years of dropping interest rates, which covered up what was really happening in the bond markets and the debt markets because it made the debt look like it was going up. But what have we had over this past year or so? We've had rapidly rising interest rates. So 15 years of zero interest rate policy means that banks and central banks and governments bought bonds that were here and are now their market value is here. That was the problem with SVB and the banking crisis not quite this time last year, but close to it, right? Is that they had to mark these assets at the market because there was a run of depositors pulling their funds, right? And so they couldn't just say, oh, well, we're holding it to maturity. And so it's really at this price. All of the banks are saying this debt is held to maturity. And so they only have to tell you this value, but they're all like that. The value is really all down there. And the longer they are, the greater that fluctuation. So is the banking crisis over? No, it is not. And what about all of those derivatives that are written against all of those interest rates? So not only are all of those bank assets, whether it's mortgages or it's government bonds or corporate bonds or student loans or auto loans or credit card loans, and understand that all of that garbage has been turned into securities, it's called securitized, right? And sold in 401k plans and IRA. So all of these retirement programs, they're in ETFs. They're all over the place. That cannot be bailed out. But they can make it look like it's going up to keep you in there. So as the insiders get out, who's left holding the bag? John Q. Public.
And I feel like that's exactly where we're at right now, because what we're seeing is Gates, Zuckerberg, and Bezos, right? They all just did massive sell-offs. And the last time that they did this was actually right before the market fell out at the end of 2021. You know, and similarly, we see in right, and you know, I laugh because Zuckerberg, he's not just cashing out, he's also building the big bunker too, right? So he's getting out and he's heading to the hills, relatively speaking. And we see even the Walton family just did a big sell off of the Walmart shares. Jamie Dimon from JP Morgan Chase selling off his stock for the first time ever. So what do these guys know, right? While John Q. Public is cheerleading because NVIDIA is now worth, it's larger than the Chinese stock market. And we think that these valuations are justified. And so I think that you are spot on right now. We're seeing the insiders move out. And I just asked the question, you have limited upside potential, in my opinion, on these equities and these stocks. I mean, and what do you want to squeeze out of the S&P 500 after we've already had this historical run up out of NVIDIA? Now, I'm not going to stand in front of that freight train and I'm not going to short it. But what are you trying to squeeze out of this thing when the downside exposure? I just did a video on NVIDIA. The numbers are bigger from this last quarterly earnings report than they were in 2021, November. The same exact sentiment on how great NVIDIA is, unstoppable, huge beat. After that earnings report in 2021, NVIDIA share price crashed 68%. So this is what I'm saying. What do you want to get? Another 10, 20% on the upside so that you can have exposure to 70% on the downside? When does it break though?
Well, that's when it becomes too expensive to maintain, right? As long as the insiders still have wealth to transfer, you'll see the central bank make sure that there is enough liquidity in these markets to make that happen. Because it is, to your point, FOMO, fear of missing out, is what's driving these overvalued circumstances. And all of this debt taking on. I mean, this does remind me of 1927, 1928, because even inside of all these funds, the leverage has grown so much bigger than it was in 2008 when Lehman went out. So really, the answer is when enough wealth has been transferred from those few to the many, you will find that it is too expensive to maintain all of all of that stuff that's underneath, all those derivatives that are underneath that iceberg, the little teeny weeny tip that we're seeing that is already admittedly 189% of global GDP just in that one little area. We're talking, what's above quadrillion?
I don't know. Yeah.
Okay, that's what we're talking about.
Yeah.
And I'll tell you something else that I really always find interesting, and this is, I think, the biggest challenge for people. But when they set up this system, they knew two key pieces. They knew, number one, that people marry the legal money of the state. So in the US, you're going to have a dollar coin so that people don't think that anything has changed when in reality, everything has changed, right? I mean, that's the way they've done it forever. And I can show it to you, actually. But the other part that they knew is that inflation creates nominal confusion. To your point, you see the stock market going up when in reality, the real trend is what's happening to the purchasing power, which is going toward its fundamental value. And you know what that fundamental value is? 4,800 over 4,800 currencies have proven it.
Zero.
Yep. On the other flip side, what you need to do, in my personal opinion, I think everybody really needs to understand what the true value or the fundamental value is of any asset or any instrument. So whether it's a stock or it's a currency or it's gold or it's silver, any of that, you need to know that.
Yeah.
And it's not rocket science. There's a little bit of nuance. So you have to think with whoever created this product's head. You got to think about it. And what was the single most important thing that they were trying to accomplish? Wall Street wants a wealth transfer mechanism, right? The bank want to keep, inflating your money, your wealth their way.
Right.
Gold, most important function as the primary currency metal is to maintain your purchasing power over time. Period. End of discussion. So how do I know the stock market says that spot's at whatever, 2,000, wherever it happens to be at the moment, 2,500, wherever it happens to be at the moment. That's what Wall Street is telling you. And so people go, oh, it's going in a range. It's not doing anything, rah, rah, rah. But every time they create debt, the true fundamental value of this goes up. So I actually just did a piece on that went out last night. So you might want to take a look at that because this is debt, right? And it's created from debt. So how do you know how much this is really worth? Yes, it's so simple. I'm not getting you to the penny. I'm just getting you close. Okay. You take all the debt that's been created in the entire world and you divide it by all the gold that exists, whether it's above ground or in ground. And then that'll tell you what the true value of 1 ounce of gold is for its most important function. Because at the end of the day, when the public loses confidence, that's when, and the data is telling me this has already begun. It's when you will see the hyperinflationary move in earnest. It's already started. Look at the monetary velocity. Mm-hmm. Mm-hmm. When they do that, you were asking me, well, how, you look at Zimbabwe, right? Roughly a little bit more than a year ago, they came out with gold coins so the wealthy could protect their purchasing power. Then they came out with the gold-backed CBDC for the public, and the public's not buying it. Why? Because you cannot convert that CBDC into real money gold. So how do you know if it's really there? Right. Is there a possibility that governments and central banks might be lying to you? Right?
Only if they're speaking, like our good friend Rick Rule says.
Absolutely. So you're looking at this going up in the stock market or trading or any of that. That's where they want your eyes. That's where they want your eyes, because then they tell you, and you look at the stock market, you go, this isn't really doing anything. It's not really true in the physical only world. It's making new highs. But this is more where the truth lies in the physical only world, in the digital world. And you talk about counterparty risk. According to the Bank for International Settlements, which is the central banker's central bank, gold is the only financial asset that runs no counterparty risk. None. You hold it and you own it outright. And frankly, if you don't hold it, you don't own it.
Yep.
Here.
Well, and we're starting to see that more and more. And I think that for me, watching this continue to expand, this banking crisis isn't over. They said it was over. They said we were going to achieve a soft landing. They said that there was going to be 6 rate cuts last year. They said there was going to be 6, 7 this year. Now the market's finally coming back down to reality. I'm just glad that we've been able to help as many people as possible. And that's what I want to continue to do. And I want to get in now to where the opportunity's at, where the real value is going to be at. Now, you mentioned gold. What's the fundamental value? I'm just going to guess that maybe it's a little bit higher than today's spot price on the COMEX markets, right? And to your point, we're starting to see it go into price discovery. Folks forget, we did just go achieve a new all-time high for gold in US dollar terms. at 2,150. Okay. And look at where we're at right now. We're about to have another government shutdown unless we continue to kick the can down the road, do more money printing, send billions here, billions there. We don't need to get into that. But what does it relate to? More inflation. What does that equate to? The dollar denominated price of these underlying assets has to continue going up. And so gold's already broken out. In every other major currency, it's already at all-time high or already hit it. And even in the US dollar, it finally did as well. It did a triple tap, if you look at the chart, above $2,000 per ounce since 2020, right? And then we went up to 2,150 here recently. I think that this party's just getting started, though. We still have a long ways to go. And my thesis is where we're at right now is the system's breaking, but they want to cover this thing over and paper it over for the election. And so my thesis right now is it's going to break, something's going to happen. I don't need to predict what the exact black swan event's going to be. I just need to, I prepare the same way no matter what the black swan event is. That's the beauty of it. I don't need to know the exact day, hour, or what the event's going to be. I just need to have what I call utility with no counterparty risk. And that's gold, that's silver. I like only a couple cryptocurrencies, okay? I'm not a Bitcoin bro, but I do like a couple. XRP is my favorite. And so I've got my bag of XRP is one of my favorite digital assets with real utility. And then obviously I have my silver as well too. And then we talk about our essentials. This is all utility with no counterparty risk. I store it. I have my XRP on my cold storage wallet. I have my silver, right? I have my essentials. I got my own business. And so this is utility and cash flow with no counterparty risk. My question to you, obviously you're a big fan of precious metals, gold and silver. In the silver forecast at Vancouver Resource Investment Conference, the consensus across the panel was about $30 silver is what we could see this year. I don't know, is that still kind of in alignment with where you're at? And how far out, would you be willing to say these things could run for gold and silver in particular?
Well, first of all, Zach, the only reason why I ever look at the spot market is because that's what everybody else is looking at. And I need to know what they're looking at so I can help them understand the truth. Yeah. So you think the fundamental value of 1 ounce of gold is just a little bit higher than the spot market, right? But you do realize that a rising gold price is an indication of a failing currency. And once you really get that the currency is failing, you make different choices and you pull your wealth out of the system. So I can tell you, because I just crunched these numbers last week, it's over $40,000 an ounce. Now you might, okay, perfect reaction, because you might think, she is just out of her ever-loving mind. But what I'm holding in my hand here is a $20 gold coin, $20, 1 ounce, roughly 1 ounce of gold. So if you'd gone back to somebody that was using this as money and said, someday we're going to see $2,000, $2,100, $3,000 an ounce gold, they would have had the same reaction that you just had with 40, because nominal confusion. You put value in this. Right? There is no value in this. There's only as long as you're willing to work for it and use it as your tool of barter. But when confidence is gone, that's what you're not willing to do anymore. And so that's when confidence is lost and they have to revalue this, lop off zeros to make you think that it's under control. So as we've seen in many countries, we've been talking about Zimbabwe, so I'll keep going with them. They've had, at one point, they had 85,000 Zimbabwe dollars for one loaf of bread, right? So what did they do? They lopped off 3 zeros. Well, how did they do that? They do it against gold. And that is when you start to see gold move toward its true fundamental value. Not the first time. On average, it's 3 times. Zimbabwe's done it, I think, 4 or 5 times. Venezuela, Argentina. I mean, you can see these overnight revaluations where they take this that has absolutely zero utility, well, other than as a tool of barter, and no fundamental value, zero, that's its fundamental value. And they revalue it against this, which is all fundamental value and 100% utility because it is used in every single sector of the global markets. So it doesn't need any government to say this is money. They do here because it's backed by the full faith and credit of the government. So as long as you trust them, you keep loaning money to them. So, yeah, if you're holding this, you're holding your purchasing power. When these other assets that are severely overvalued right now drop down and all of that garbage inflation is burned out of them, guess what? It flip-flops like this. Now you have purchasing power to convert into those then undervalued assets. It's not rocket science. It's just a repetition of history, and you just need to understand the patterns. You don't, to your point earlier, you don't really have to understand what everything means. You just have to know that you can look at a long-term chart. You can see a pattern, how it's moving. You can tell whether that pattern is positive or negative. And you can see, more importantly these days, well, I don't know if it's more importantly, but maybe equally as important these days, is you want to see when that pattern shifts. And when you see that, which I've been seeing a ton of it, which is one of the reasons why I'm sitting here telling you without a doubt in my mind that we have already begun that hyperinflationary move up because of the massive pattern shift in the speed at which money changes hands, the monetary velocity. And you can go on the Federal Reserve website. Really is my favorite site. I'm on there all the time. It's called FRED.
Right.
Search it. And that is the Federal Reserve Education Department. You can put in purchasing power of the consumer dollar. You can put in CPI. You can put in, monetary velocity. You can go in and play in there. I think they're maybe more honest in there than anywhere else because who goes there? Just nerds like me. Mm-hmm. Mm-hmm. You will see when you start doing that, if you see something going like this and then all of a sudden it does a big down, okay, that's a pattern shift. If you see it going all the way down like this and then there's a big up, it's got to be pervasive. Little blips are nothing. But pervasive shift, then what you know is something nasty or something positive, depends on if you're looking at what you're looking at. But generally speaking, especially in terms of currencies and what's happening with not just the US dollar, but every fiat currency, every government debt-based currency on the planet, things have shifted and I have my bug out. Yeah. I got my bug out. 2020 was when I discovered that hole in my personal strategy. And gets pretty local, gets pretty scary there for a minute. You got to be prepared. Again, going back to the importance of community because you don't have the luxury of time. I've been working on this. I bought this property in 2010 and I bought my bug out property like about 3 years ago, I think, right after 2020, I started looking. Yeah. So it took a little while to find the right space. But we just don't have that luxury anymore. So you have to depend on community locally so that you have food, water, energy, security, barterability, wealth preservation, community, and shelter. You bring in whatever talents and skill sets and assets that you have. Somebody else brings in theirs. And now together you can get through it. My bug out location is being built to accommodate 40 people. And I have doctors, I have engineers, I have dentists, I have gardeners, I have farmers, I have carpenters and electricians. And, so we're building a community and making sure that it can support 40 people because I can't do it on my own. I haven't done it all on my own. But globally, because if you read what the central banks are saying about the CBDCs, they are most likely going to bring that out in crisis with inflation and hyperinflation soaring, promising there will not be any more inflation. No, because what they say is they're going to have their finger on that button of the economy 24/7. So that means that they will send us into negative rates because they've also said that Negative rates are a choice. And once they have those CBDCs, there will be no limits to how low they can push interest rates. And what does that do? Well, inflation has robbed you of all your purchasing power. Negative rates robs you of your principal. And then we're in, back in feudal times where you just have a few people that own everything and everybody else rents. Guess whose best interest that's going to be in?
Yeah, yeah. You mean you're not excited to go live in a 15-minute city and own nothing and eat some bugs? You're not looking forward to that?
No, I am not. In fact, I'm voting with my wallet and my purse and food, water, energy security. That whole mantra, we got to do it all. But globally, we need to come together in community so that we can stop that, right? Because there are more of us than there are of them. And if we stay in these markets, then all we can do is convert it into this. What choice do you have? You don't have any choices. If you come together in community and you vote with your wallets and your purses and your positioning into sound money, guess what? We've got a shot, I believe, anyway, and I'm going to die trying. That we have a shot to influence a more fair monetary and financial system on the other side of this mess after all that garbage is burned away. And there are opportunities. There are huge opportunities just based upon the fundamental value. I mean, if you really believed that this right here, right this moment, without any more debt was worth 40 grand and you could buy it at 2150, what do you think?
I might consider it.
That's why central banks have been loading up on gold like crazy.
Yeah. Well, and it solves the problem, right? We think about the little issues that we have. We got a little credit card debt. We got to pay our mortgage and our bills. These guys have trillions of dollars of unrealized losses on their bonds, on their commercial real estate, on their residential real estate, the derivatives exposure. They got to fix this. And, revaluation is one of the best ways, right? And like you said, the institutional smart money, they get out. Before the gold got confiscated, they sent the gold on the ships back across the pond, right? So we've seen this play out time and time again. Okay, you gave us 40,000 gold. That was exciting. Any forecasts on silver for us?
Well, the true valuation, I've done a lot of studies, and in fact...
Sorry, Lynette, I just want to make one point too. For me, I believe that the fundamental value is a little bit more than where we're trading at spot and between 40,000. And I'm excited to go on that journey with you to find out where the real fundamental value is. I just want to say that.
Well, I actually didn't recalculate it for silver, but historically I do it at a 20-to-1 level. Now, what I'm concerned about though, is that you might say, well, wow, there's a whole lot more potential in silver than there is in gold in terms of this stuff. But this stuff is irrelevant. It just means absolutely zero, zip, zilch. It's just garbage. That's all that it is, right? So it is in its functionality. And as the primary currency metal, since this is a currency life cycle issue, and they do those revaluations against it, for a while, we will see that gold-silver gap narrow. I mean, it's the widest, I think it's, if not the widest it's ever been right now. It's near there.
It's like 90-to-1. It's crazy.
Gaps start to close, but then as we enter the true hyperinflationary phase, that gap widens again. So that's why, for me, this is my primary position is in gold. Actually, that's my emergency gold because it's just a raw lib. This is my real position because this is what's going to hold the value and enable me to build out basically an empire of undervalued assets when the timing is right. And all I'm going to look for, it's simple, is this little cup formation, because that tells me when big money has recognized an undervalued circumstance and has begun to participate. And that's what enables me to get in somewhere near a low.
Yeah. Now, right? Are you looking at equities at all? Like I went around and I talked to all these guys up in Vancouver, and they all got a story and they found some resource somewhere. And any interest in the equities market at all?
In the past, yes, because I'm an ex-stockbroker. So obviously, I have that, but the answer would be no, not at this time.
Okay.
Because there is not even one tiny itty bitty doubt in my mind that this is a currency life cycle issue. And, you might remember that in Venezuela in 2000, and I think it was 13, 14, 15, they had the best performing stock market on the planet, but they were also in major hyperinflation.
Right.
So don't be fooled by those numbers. That was, they know that people, not one man in a million understands inflation. We even had Fed Chair Powell and Christine Lagarde come out on TV and say that they didn't understand inflation. How very scary to have the people that are controlling it admit that they don't understand it either. Right. But don't be fooled by the numbers. The numbers don't mean anything. It's what you can do with them that counts. So I own both gold and silver. This is my barterable position, different sizes, and it's based upon my current cost of living, my children's current cost of living. So there's a certain amount that you need to have to sustain that, and real estate and different things. I mean, it's a pretty specific strategy, but it's just based upon historic patterns. That's all.
Yeah.
So I feel like if something's happened 100% of the time and over 4,800 times, and we're doing basically the same thing, I really don't think this time is any different. I think we're going to end up with the same results. Yeah. So I just position myself, like you said earlier, and I thought you said it really well. I usually go, well, what if I'm right? And what if I'm wrong? And if I could do something where it really doesn't matter whether or not I'm right or wrong, rock and roll hoochie coo all day long.
We'll be doing the boot scooting boogie to the bank, or to our bunker, our compound. On real estate, now you mentioned you already made some moves there. What do you think this? Just a quick data point on real estate. We're seeing a real estate reset, is what I call it, right? Folks say this time's different. Well, of course, this time it's a whole heck of a lot worse. We just went through that. It's an everything bubble. It's not just real estate, and in some markets, real estate's still going up. But in some markets like office, it's an absolute sacrifice. This is why I call it a real estate reset. For you, you've positioned yourself for your family. You got your off-grid or your compound there. Any opportunity in real estate investment? I know it was a really hot investment over the last 10 years when everybody got a participation trophy with low interest rates. Where are we at now for the real estate asset class?
Well, real estate basically runs a couple of risks. And again, the strategy accommodates those risks. One is debt risk, so mortgage risk. And you want to have the ability in a hyperinflationary mode to go ahead and pay off that mortgage like as soon as I'm going to be doing it. There's usually a window within 90 days, probably faster than that, to pay off that mortgage free and clear. It's the only reason why I actually am carrying a mortgage, because I want to execute that part of the strategy. The other risk that's run is in property taxes, because taxes are the way that governments generate income, and property is classified as immovable. You can put this in your pocket and walk away. You can't put your house on your back or your piece of land on your back and walk away. And so what they have a tendency to do is increase taxes on it. And even if you have that paid off, you then, if you can't pay your taxes, you will lose your property. So historically speaking, what I expect to see is commercial real estate drop. This is just history. This is not my opinion. This is just history. We'll see commercial real estate drop somewhere around 95%. And residential real estate drop about 85%. So right now it's up here and you have gold down here, right? That's going to flip-flop. Wow. So that's what I was referring to. If you are in the right place at the right time with an asset that holds its purchasing power and runs no counterparty risk, that's when you are going to be able to snap up those income-producing assets, because so much of this real estate has been accumulated on debt and then turned into a financial product, leveraging that debt, layers and layers and layers of that debt. And when you have debt, all debt has to be taken care of in some way. Either you got to service it, you got to roll it over, you got to default on it, or you have to pay it off. Okay. Can you think of any other choices?
No.
You want to be in a position to take advantage of what you can't get away from, right? Everybody's going to be impacted by this because it's a currency life cycle issue. And I might say, for those that are going, what are you talking about, a currency life cycle? An example that I like to use is she's going to be 9 this weekend, granddaughter. She's 9 years old. I'm 69 years old. She is at a different part of her life cycle at 9 than I am at 69. And understanding what people aging looks like, you're not going to look at her at 9 and go, oh, she's probably going to be 70 this year. Just like you're not looking at me and going, oh, you're going to be 9.
Mm-hmm. Mm-hmm.
So current everything, I don't care what it is. It all has a life cycle. Yeah. So we need to be clear on that. When I'm talking about the patterns, I'm just talking about those repeatable patterns.
Right. Now, final asset class is this new digital asset class. Obviously, I've explained how I got a little exposure there. I believe that 99% of cryptocurrencies go away. There's only a couple with real utility. And I like XRP as the potential for a bridge currency to be able to have interoperability between said CBDCs. And so we've already talked about this a little bit. Obviously, distributed ledger technology plays somewhat of a role. Do you have any exposure that you have to the cryptocurrency space? And what are your thoughts on kind of how this new system gets completed?
Well, again, the way that they make the transition is by positioning it to look as normal as possible so that they can make the change, remain in power, but you don't know it until the system is in place, and maybe you never then know it because you don't know how to pay attention to it. So that is my general feeling on cryptocurrencies, that they're being used to get the public comfortable with it in order to make that transition. So at this point, I have zero exposure. I am all in proven hard assets because that's intangible. And if you don't hold it, you don't own it. And it's also based on the grid. You may be able to hold it in your wallet. And I think that's a great thing. And I think a great part of the utility is you can put your wealth on a little thumbnail, stick it in your pocket, and go wherever you want.
Right.
That has a level of value.
Right.
But having said that, I cannot sit here and tell you which cryptocurrency is going to survive this mess. So I'm very, very patient. I like a longer history than 2009.
Okay.
I am a technician. I am a historian. I watched Bitcoin since it was $7 a coin. So it's not like I'm not familiar with it or not familiar with the technology. I am. But if you don't hold it, you don't own it. This is a currency life cycle issue. Let that wash out, because then we're going to see who's going to survive, who is not, what that form is. And if you're holding your purchasing power, you can always convert it. Always.
Yeah. And I think the best example of kind of what we're talking about here, where they reset it and you almost don't even know what's happened, and they've, achieved complete control. The perfect example of that's Jamie Dimon with JP Morgan Chase, where he says Bitcoin's a pet rock. It's worthless. It's this and that. And then we come to find out that they're the custodians for multiple ETFs. So now that they got their ducks in a row, JP Morgan, they just put out the perspective yesterday that not only is this rally going to be sustained, but they expect it to go further. So now that they get all their ducks in a row and they're ready to make their money on it, whether it goes up or down, they don't care. They're going to make their money and they're going to control it. And so I think this is the perfect thing, that by the time these assets, gold, silver, others, are revalued and we go through this, the common man or woman, unfortunately, I think is going to be priced out. Like I said, I don't know if gold's going to go to 4,000 or 40,000. I'm excited to find out, and I'm going to make sure that I have exposure to it. Now, is the S&P 500 going to go up another 10, 20%? I don't care to find that out because I'm worried about that downside. Where fundamentally on these assets, they are undervalued, and we look historically, this is the real value that's been running our world for hundreds and thousands of years. And we continue to see the utility grow for silver. We continue to see the demand grow for gold. The numbers that we're getting out of these other countries is incredible. And I think that in large part here in the West, a lot of us out here, we're going to crypto before we're going to precious metals. But if you look at the data out of these other countries like India and China, the millennials are actually eating up precious metals. And so for me, I got exposure to both, right? I got old world, physical world money, and then I got digital too, right? And then finding real utility is the focus for me. I think that that's where the real value is going to go to. And as long as they keep kicking it down the road and keep printing those dollars, these said underlying assets, they only go up higher. So
well, go up higher in terms of dollars. But if you can't buy anything with this, tell me what good it is.
Yeah.
That really is that perception management. That really is inflation hiding and creating nominal confusion, right? I don't give a crap. Look at Zimbabwe. You could be a trillionaire and you can't afford 3 eggs, right? It doesn't matter how many of these you have. It matters what you can convert it into. Yeah. And I get that is a really hard concept, but anybody that's lived long enough to see 9,500 average income supports a family of 4. And now what? You've got people making $250,000 a year that's living paycheck to paycheck. What does that tell you? It doesn't matter. It's not that this is worth 40,000. It's that the dollar is worth nothing when that happens. Nothing.
Yeah.
You can't convert it into eggs or anything else.
Yeah, and I wanted to ask you before we go, the states, now we're seeing dozens of states which have made gold and silver legal tender, right?
Yes.
This is why I love living here. We have somewhat of a chance. The state that I live in is kind of silly, but we're seeing other states around the republic here that are actually starting to make gold and silver legal tender, and this is a step in the right direction.
Absolutely. And unfortunately, my time is limited. I haven't. Sorry.
No, yeah, we'll wrap it up. Lynette, where can everyone find you at?
Well, they can certainly find me on the YouTube channel at The Lynette Zang, Twitter, The Lynette Zang, and Instagram and Facebook at Lynette Zang. We'll be opening our website shortly. I was with the company for 22 years, and I just recently left them. And now I get to do any darn thing I want.
Awesome. We'll plug all the links down below, folks. And on the way out, if you could just like this video, share it out far and wide, and make sure you guys go check out Lynette's page as well. Lynette, it's been an absolute honor and a pleasure to have you on. And I wish you all the best in your journey.
Oh, thank you so much. And I really appreciate you having me on because I think it's so important for us to communicate, my experiences, which, you haven't gone through, but I can maybe help you see it, look at things just a teeny weeny bit differently, because then it's amazing what you get to see.
Yes, absolutely. Appreciate you so much. We're going to wrap up this one, folks, and we will see you in the next one. Everyone take care and God bless out there. I am your host, Zach Rector. I really appreciate all of the love and support. If you want to support the channel, just remember that you can start by smashing that thumbs up for me, sharing this content far and wide, and everything else is at my website.